What's up, guys? Mike Sharp here. This is Sharp Investing, and I have bought a piece of Ecopetrol. It is the state-owned oil and gas company in Colombia. But first, before we get into that, I want to say, let's go Mets! Let's go Mets! Anyway, this video is probably going to age badly because the Mets did not look very good when I went to New York this past week. Okay, it is Saturday, October 19th, and I have bought, like I said, 10% of my portfolio into this company called Ecopetrol, and I want to give a shout out to Eve, my buddy who put me onto this company. He's owned it for a year and collected a massive amount of dividends, which I do not think are going to keep going in the same way that they have been going, but I think we are still going to see some pretty hefty dividends over the next 2 years. Now, this is an oil and gas company, so it's obviously a cyclical business, and I am not here to have any projections on the oil market. This is not a macro thesis video. This is a political play. Okay, so I guess if I set the table a little bit, I have historically seen a few setups like this that have worked out really well. One of them was in Greece. There was a sort of a left government there, and there was a bunch of Canadian gold mining companies that had mines in Greece, and basically they made it really difficult for these miners to get anywhere in Greece. But what happened was, as the next election approached, and I talked to a friend of mine, I said, is there any chance that this other party is going to win, the more right-wing party? And he said, yep, it's definitely possible. And so what happened is, as the election gets closer, the hype sort of starts building that there might be a change in leadership, and these gold mining companies did really well. More recently in Argentina, we had, and I didn't make any money off that one. That was just a thesis, and I was just watching. But the next time this setup played out, I was ready. So it recently, with the leftist government in Argentina, which totally destroyed the currency and the economy, and everybody just ran for the hills. This was, I think, 2021 when I bought a piece of Central Puerto for $2, and it was just, trading for less than, I think, trading at like 20% of book value or something, and, very low earnings multiple because everyone was scared of the government. But what happened was, as we all probably know, Milei got elected just last year, and he's a very very strong libertarian type, and the market loved that. So I guess the idea here is that if we look at Colombia, they have an ex-Marxist guerrilla who is the first ever left side president of the country, and he had all these sort of grand ambitions to reform all this stuff, and the market hated this, right? And so what I'm seeing is the setup is quite similar. Investors don't like Colombia because they're afraid of this president that's in place. And what I think it's doing is, I think it's going to set up for another run up as the next election shows up in 2026. So this is a less than a 2-year hold for me. I'm either going to be right or I'm going to be wrong, but I'll be out prior to the election in 2026. I want to be clear. I am not betting on this election. It doesn't matter to me which party wins the next time. What I want is the excitement and the hope that something is going to change, and the market, I think, will react to that going into the election. If you want to gamble on the election, that's fine. I don't have any edge there, but I think I do have an edge here in that the market is very short-sighted, and an event that is 7 quarters away, the market doesn't care about that. But as we get to maybe 4 or 5 quarters away, the market my thesis is that it's going to start waking up to this. Gustavo Petro is the current president, and I think what's happened is the damage is done now. He's raised taxes on oil and gas companies, and there's implemented this sort of surtax where what happens is, depending on the price of the oil, the 10-year sort of rolling average, there's these graduated surtax rates, which means that as oil goes up and these companies make more money, I actually should mention this is a state-owned company. Ecopetrol is 80% owned by the government, and it is essentially their cash cow. A huge amount of the government revenue actually comes from this company. So the fear was maybe, oh, they nationalized it or whatever, but it's effectively nationalized already, sort of, right? They just pull money out of it. It's the national piggy bank. And so what they've done is they've raised the tax rates. The surtax goes from 5% to 15% at the top rate, and the company estimates that the max rate that they could be paying on income on tax on income is 50%. Last quarter, where they were actually in the highest surtax rate, the effective tax rate was 42.4%. So I think we're sort of in the worst case scenario range right now, as that 10-year rolling price of oil has got above the threshold of 82.20 per barrel. So this is as bad as it's going to get. I love buying stuff when it's max pessimism and max pain, right? And the company is still churning out a huge amount of cash on, let's say, $70, $75 oil at the moment, even though the 10-year average is higher than that because of that big spike we had recently in 2021. So if we look back at this company, like before I do that, let's just set the whole thesis up. So within 2 years, there's going to be a political excitement for the government, and in the meantime, I plan on collecting fairly good dividends if the company continues to pay them. And I do think there's a very strong high likelihood that they will continue to be paid, but maybe not at the huge rates we've seen previously. But before we look at the income statement, I'll just touch on the balance sheet. Now they have 27.7 billion US in debt versus 4 billion in cash, which is not a great ratio, obviously, but it's an oil company, so we're not too worried about that. The ratio is debt to EBITDA ratio is 2 times, so it's not the amount of debt is not unmanageable for them. They have increased their debt load over the last 10 years, but that was mostly to fund some acquisitions that they made. But if we turn here to the income statement, I just did a summary here. Basically, you'll see that they're almost always profitable. They weren't profitable. 2015 was the only unprofitable year where they lost 1.5 billion. But even in 2020, they made money. And as you can see, the operating cash flow is very healthy as well. The average there is they average about 6 billion in operating cash flow per year. And the earnings are right around 3 billion a year on average. So the way that they work is in terms of the dividends, basically the dividends are a priority here because it funds the government, like I said. So they seem to adjust their CapEx based on the amount of operating cash flow. And if you take the total dividends plus the CapEx for the last 10 years, they almost balance exactly to the operating cash flow. So they're basically paying on average about 37% out to dividends, and then the remainder goes to CapEx. And they, as you can see, they adjust the CapEx so that they can keep paying dividends. So that's why I think I might look at this as sort of more of an average scenario, because I can't forecast oil price going forward. I don't know what it's going to be, but I think if you hold this company, you can kind of expect about a 13% dividend average. Now, if we look at 2024, I mean, their average net income is projected to be 3.67 billion. We're about halfway there so far, and oil has come down, but and there's a whole bunch of factors. But like I said, this is not a macro thesis. Some of the biggest, most profitable companies in the world are playing in the oil futures market, and I have zero edge there, and I do not want to fight them on it. The thing I do know is that oil is a necessary commodity. No matter how much noise we hear about, renewable energy, it's nowhere near taking a dent out of oil and gas. I mean, coal might be a little bit of a different story because it seems to be the primary thing to try and replace with renewables, but the scale is so huge that I don't think we're going to get there anytime soon. It's very hard to make plastic out of coal or wind power, and it's very hard to sort of fly a plane with wind power. So I think oil is necessary, and I would just look at these two sort of data points in these charts here. As you can see, oil, the demand for it keeps rising, and over the long period, if you take out the 2020 sort of mess, the COVID mess, 2020 and 2021, the demand just goes up every year. So I think that, and the main driver that I see of this is that, we have a massive middle class that's coming online in Asia. And, this is projected to go up by another at least $1 billion, maybe $1.5 billion over the next, 6 years. So, sorry, did I get that right? No, it's less than that. Let's say 750 million to $1 billion. That's a lot of people who want to increase their standard of living. And one of the main things you need for a standard of living increase is cheap energy, right? You can't get there on expensive solar or wind power. Now the cost of those things will come down, but oil has driven the boom in the world over the last 100 years. So I don't expect that to stop anytime soon. And I especially don't expect it to stop in my 2-year time horizon. Now, one of the things that could happen to derail this is a recession, right? So if there is a recession, the oil price will drop, and this company will, stop making as much money. The dividends will potentially dry up. And if that happens and coincides with that election, I might not make any money because the earnings would be down, and running up into the election, it's possible that the stock price doesn't react to the level that I want it to. So it's a bit of a bet that we're not going to get a serious recession over the next 2 years. And I would just say that that's a fairly large risk that's out there on this thing. I don't think that there's a risk that this business is going to go under. I don't think there's a risk that the government is going to do anything crazy here. And I should talk about that for a sec. Investors, us Western investors, think, oh, Colombia, I don't want any part of that, right? It's South America. They have all this nasty history, the politics. There's all this risk around it. But if you actually look into Argentina, or not Argentina, don't look into Argentina. There's too much positivity there. The time to buy is when the blood is in the streets, when everybody's miserable, which is right now in Colombia, and it's not like that in Argentina. So unlike Argentina, where that typically votes in left-leaning governments, the Peronist party that just destroy their currency and their economy, in Colombia, they almost always have right-wing parties in, and it's actually the government system is very much like the United States, right? They have a president and a Senate and a House of Representatives, and so it's quite difficult to actually get policies through if you don't have control of those houses, right? And Petro doesn't, right? I can't remember how many parties, but this is not a two-party system. There's many parties, and 15 or 20 of them have seats in the House and the Senate. And in order to get anything through, you kind of have to cobble together these. You have to cobble together like a big coalition that'll work with you, right? And Petro seems to be losing that ability right now. His approval rating is quite low, and he doesn't really seem to have much ability to get anything through, much less a radical agenda. Like a radical agenda is not going to probably get through. And on top of that, the current term limit is only 1 year. So that stuff has changed a lot over the last 10 years. They've gone from 1 term to 2 terms. But this isn't a situation where you're going to end up with I don't think you're going to end up with a sort of dictator Venezuela type situation, particularly because he doesn't have the army on his side. So I think the political risk here is lower than it appears to be at first when you first look at it. Let me just talk about a few other things here. In terms of their production, the company is not really a growth company. I mean, if you look at 2014, they were producing 755,000 barrels a day. And last year they're at 739, and they're sort of like, hey, we're growing right now, but that's just because the production dropped over COVID. So it's not a growth business. This isn't. I wouldn't say that this is something that's going to be much bigger in time. And I guess I should also mention that they do have less than 20%, but it's a portion of the revenue that comes from the United States. So they do have some less risky jurisdictions in their portfolio. They've also got some operations in Brazil too, not less risky, I don't think. But if we look at I should have mentioned this before, but just in terms of cheapness, right? The company is trading right near 2020 lows, and if you look at a chart, basically the stock spent less than 2 weeks below $9. Now it's trading at $8.20, I think, as of today, and I did buy at $9, so it's actually down almost 10% since I bought it. And if you look at 2020, it really didn't stay down there very long. Now, we should recognize that the sort of baseline price has moved down because of these taxes. So based on the same production level and same oil price, the profitability will be lower because of that surtax. So when looking at a past chart, you have to kind of go, so maybe the bottom here could be around 6 or 5, but I don't think, given the trailing and the forward PE ratios, which are less than 4 in the trailing PE, and then the forward is 4.65, I don't think that there's a huge amount of downside here, barring some global catastrophe. But maybe that's famous last words. So I want to talk about there's some subsidies too. So the government takes with one hand and they give with the other hand. So they're trying to make life more affordable for their citizens. So there's this fuel price stabilization fund, which is basically money that the government is giving to Ecopetrol to subsidize the oil prices for the consumers. And I guess one of the risks was people were that they weren't actually going to pay this out. But they have been paying it out, and they've paid it down quite substantially over the last year and a half. And that was one of the things that allowed them to increase the dividend to the extent that they did. So that's one reason why the dividend won't keep going at 30+%. But they still do have $3 billion left in this FEPC fund. That's the stabilization fund that they're yet to pay out. So that should be coming to the company within the next year or so. And so we could see that the average dividend that the company gets, or that we get as investors, could be higher than that sort of 13% average, right? But it will be temporary. And that's fine with me. Like I said, it's a 2-year hold, or less than 2 actually. I don't want to hold into the election, but I do think this is pretty much for me, it's like a heads I win, tails I don't lose much, right? Because even if my bad case scenario happens and there's a recession, and during that time the leftist party gets reelected, I still think that this price is going to be above $9 at some point in the future. So I would just have to kind of wait a bit longer to at least get my money back. So for me, it's a great play. Pretty good dividends, 10 to 20% dividends for the next per year for the next 21 months kind of thing, and potential for like about a double, I would say, into the election. But anyway, that's Ecopetrol. If you think I've missed anything, just post it in the comments. Let's go Mets. See you in the next video.